And next, what we'll get into is the trillions of dollars waiting on the sideline, ready to get involved in this space. But there's a few things that have to happen first. So in the next panel, we'll have a debate about institutional adoption in crypto. What is required to bring in that next $1 trillion, and how will it happen? Speaking on this panel will be Nicholas, CEO of CoinHouse, Kate, institutional sales at CEX.io, Laszlo, co-founder and CEO of Kiln, and Ivan, blockchain and crypto lead of BPI France, moderated by Peter, deputy dean in CIED. So please, warm round of applause for the next panel.
All right, good morning, everyone. 2X, we're going to talk about how we double the amount of money coming from institutional into Web3, into crypto, going from about $1 trillion to $2 trillion. I'll ask each of the panelists to kick off, tell us a little bit about how their company themselves have contributed to the first trillion, and if you already want to say something about a sort of a top opportunity or challenge in the institutional space, you're welcome as well. Nicholas, CEO, CoinHouse, how have you guys contributed?
Well, whoa. Hello, everyone. People told us that we have to speak loudly, so... well, CEO of CoinHouse, we are a crypto broker in France, well established since 2007. We have contributed with several billions of euro that came through our platform, so people have invested this money. Some of them have been becoming very rich. Some are waiting for the next bull market, and that's a way as to contribute. We have both retail and corporate investor, mostly SMBs, which is something very, very probably unique in the positioning. We know quite well how to work with them. And yeah, we bring a lot of solutions to them, especially not only the possibility to buy and sell crypto, but also the possibility to access to asset management product, staking, a lot of solution to manage their money with professionals.
Right. Super interesting. SMB, so we'll definitely want to unpack what are the different segments in institutional. But first, Kate, institutional sales at CEX.
Hello, everyone. So I'm heading sales at 10 years old crypto exchange, which previously has been mining Bitcoins. And we've mined around 3% of all the circulating Bitcoins in the world. So I would say it's a very direct contribution to the trillion in the crypto industry. As the future opportunities, particularly as a futurist at Kate Goes Tech, I see the interaction and interoperability between blockchain and all the other forefront technologies, specifically AI, quantum, and IoT. So I think we should definitely be focusing on building these future industries together.
Thank you, very good. Laszlo, CEO at Kiln.
Hi guys, can you hear me well? Amazing. Yeah, so I'm Laszlo Szabo, the CEO and co-founder at Kiln. And Kiln, we are the leader of liquid staking in Europe. So we basically spread transparent and secure yield in the crypto markets. We have over $2 billion of asset under stake, or asset under management, if you will. And yeah, I mean, our mission is really to spread transparent and secure yield, to 1 billion users. So right now, we have millions of customers working with exchanges, custodians, wallets, but I'm pretty sure tomorrow, like billion users will use staking, liquid staking, and DeFi. So yeah, that's kind of what we do.
We'll dig into that as well. Okay, Ivan, crypto lead at BPI France, a pillar of the tech scene here in the country.
So BPI France is kind of the French sovereign fund. We have 80 million indirect exposure. We give grants, loans to crypto companies, including Kiln and CoinHouse. Mostly in France, we are investors in 6 companies, including Ledger, and we are also investors in 7 crypto VCs. 80 million is kind of okayish for Europe. it's nothing compared to the 7.5 billions of A16Z, but working on it. And we also bought 50,000 euro of tokens on the open market. Lot of work for the great transaction. But we're on the way, and people are willing to learn and get more exposure. And it's steps, it's baby steps, but it's very important steps.
Anyway, we'll definitely be listening for you because you're really at the coalface. How do you get big institutions to move in this space? But maybe let's kick off with a first question about what are the big growth opportunities. Laszlo, you brought up staking, so do you want to elaborate on how you see key growth opportunities?
Yeah, I mean, and by the way, coming back on your question about challenges, I think regulation, and we'll come back to it for sure, and securities
We
are...
cannot avoid that, so
Yeah,
we'll go there.
and maybe onboarding. So, you know, I mean, are you familiar with staking at all, or the one that knows staking, raise the hand?
Who stakes?
Who stakes?
Let's ask
Ethereum, staking? Yeah, I mean, staking is the first and primary yield in crypto, right? You get rewarded by bonding, by putting in collateral your ETH, your Solana, the major proof-of-stake protocol tokens, and in return you get this yield coming from the inflation of the protocol and the network fees. So we've seen kind of like centralized lending collapsing in this immature markets the past months because of FTX, and really staking is the government bond, if you will, of crypto, the primary source of yield. So of course, we've seen a massive amount of growth in ETH staking since Chapella, right? So ETH becoming like the 50% of the market in staking, and now you can withdraw your ETH, right? Before you were locked for a number of time for a year and a half, kind of, since ETH launched their staking operation. So it means that now, yeah, you can go in and out in a much easier and secure way, in a way. So it's like we've seen just a tremendous amount of ETH that has been taken the past months, and ETH staking is about 15% of all ETH that are staked, and we think it's going to be about like 60 to 65 to 70% of all ETH that will be staked in the future. So yeah, tremendous amount of growth coming.
Nicholas, maybe you next on where you see growth.
Well, asset management clearly also the staking is part of it. So we work with people like Kill and other to bring. In fact, we just starting again to offer some product yield product on the platform. It's starting few days ago, and we already have. Very impressive amount. It's in fact we've reached in 4 days what we were expecting to get mid-July in terms of amount of money.
What's the split between retail and institutional?
It's in terms of revenue, it's 50% institutional and 50% institutional and corporate, and 50% retail. On the retail side, we've got 2/3 are premium customer, meaning people that invest much more money than what the people usually do in crypto. We have a kind of premium model in that way. That's on the revenue side. On the customer side, for sure, you've got a Pareto, which means that you have much more retail people by number than by volume. And people are definitely, especially during this period, interesting in either doing DCA, so dollar cost average investments. You invest regularly rather than putting your money in one shot, or you basically hold and stake, get some return. Start working also with our asset management products, so we manage your money on behalf of yourself, and we have interesting return on those products. So I see the evolution coming from this part on our side. And in general, in the market, we've got more and more institutional coming, but then it's a question of which institutional are we talking about. I think it's one of your questions. So.
Yeah. Kate, maybe you next. Again, anything on growth opportunities, but I'm also curious what you brought up about interaction with other technologies and whether that's already a growth opportunity.
I think in 2017, the CEO of JP Morgan openly called crypto a fraud. While currently JP Morgan is at the forefront of crypto adoption and doing various blockchain innovations and launching their own token, does that mean that crypto won? Does this mean that we actually already overcame this barrier and it's a wide crypto adoption? Not at all. Whatever they're doing is still a drop in the ocean. It's like we are talking currently about $1 trillion, while the traditional economy is tens, hundreds of trillions. So crypto is nowhere near gold, cash, or real estate. Why? Well, probably we have to go back to our most favorite topic here, which is regulation. When we're talking about regulation and some politicians doing nasty stuff we don't like, it's not because they're stupid or ill-informed or not educated enough. It's not in their interest to bring more regulation because it would mean that their sources of income, their established patterns of operation would be disrupted. So I think we need to be talking more about the lobbying, geopolitical, and interaction with the top decision makers.
All right, let's go there. I mean, clearly, who's got the most to lose from the disruption of the current financial system? Probably the US, right? And so you can interpret some actions in that light, perhaps. Okay, so why don't we dig into the regulatory stuff and not avoid it? Maybe put it a little broader. Where do you think about geography? So how is Europe positioned? How are different countries and jurisdictions are taking different approaches? All right, you're willing to start. Thank you very much, Nicolas.
Well, it's because I'm regulated as Kate are, but I think France and Europe is probably much more advanced, and we see now the debate in the US around the SEC and the qualification of some tokens as security. They are still trying to define themselves what is crypto, in fact, and I think they are in the wrong direction, and they are not taking the subject by the proper way to manage it, which is strange enough. Because usually they are much more pragmatic and business friendly than we are in Europe. In Europe, we have established a regulation which is so far.
Are you going to say MiCA is business friendly? Is that the?
Well, yes or no, because MiCA is a sense of accelerating the business in some way. I mean, we are dealing with crypto every day. We have billions of money going around. You cannot manage this money without a regulation. I mean, at some point, we have to be serious about it. So you start with nothing, and you see what happened, and some great company over the world have succeeded making a lot of money by doing creepy things regarding regulation, KYC, and everything, which means nothing. So that's good. They make a lot of money. Great. Now they're probably going to pay a little bit, and maybe some of them will shake. But on the side of Europe, I mean, the regulation in France started 3 years ago. We were the first one regulated March 2020. And the regulation is not blocking us. We have banks. We work with Société Générale, with other banks. We have been able to make businesses and so on. So if it's working, and MiCA is just the next step. And what was good is to say that you first start with a regulation mostly looking on AML and CFT, which is only anti-money laundering and fight against terrorism and white blanchiment d'argent. Sorry. Anyway, that's the first step. Now you need necessarily when you deal with customer to have a proper communication, customer success. You need to get funds as well. We have seen that with what happened last year with FTX, Genesis, and some other guys. They were claiming the balance sheet. They had one, but what was the reality behind? So we need also, even for us, to work with people that are sustainable, that also are able to show reality about what they are doing and not just hiding some stuff. So I believe in some point, when it's graduated, it works. MiCA is in 2 years from now.
We'll see.
We'll see.
Yeah. But clearly the industry is at a point where some regulation is better than none, and certainly better than the uncertainty of who knows what could come. Ivan, over at BPI France, what's your perspective on how Europe is doing within the global regulatory context?
Yes, Europe did a tremendous job, and that's great. But there is a question about, is it a real first mover advantage? Middle East is very well positioned right now. IDGM is doing also a tremendous job, and they have a little more money than us right now. I
Stop
think
filling up your car.
And
and
still give money to the BPI at the end of the talk.
yes, we will invest it wisely. And no, more seriously, US is very interesting because yes, you have a sheriff shooting in the air every morning, but they did something. Franklin Templeton did an application called Benji, and you have a bridge between crypto liquidity and tokenized money market funds, and everybody's happy because if you buy money market funds, then you buy dollar, and everything's on chain, and everything's winning. So this is a sign where US are not dumb. They know what they're doing. If the dollar is winning, they would go for crypto for sure. But if the dollar is losing, then it might be another story.
Laszlo and Kate, you want to get in a little more on regulation? Also, I'm curious if anyone's active in Hong Kong and can elucidate what's happening out there.
Yeah, I mean, we have clients everywhere in the world. I would divide the US, EMEA, Middle East, APAC, Singapore, Hong Kong, as you mentioned, right? I think the most massive growth in at least B2B crypto in the coming months and years will come and will be linked to business-friendly regulators. It's the case in APAC, like Singapore has been very friendly for years, and now Hong Kong is coming back for many reasons. But obviously, they kind of missed a few years pushing away people in Singapore, and now the Chinese government seems to be willing to get crypto companies back in Hong Kong.
Competition is an interesting thing, even at the regulatory level, right?
Exactly, right. Middle East, obviously, it's now a big hub in the middle of the desert. And then, obviously, EMEA, MiCA, at least at the end of the day, we have clarity, we have regulation. The problem in the US right now, and that's really a specificity that you have in the US, you have two regulators, right? You have the SEC. At least, yeah, of course. Yeah, maybe three, maybe four with you and five with me. I don't know. It's like there's many people that giving opinion right now. So of course you have the SEC, the Security Exchange Commission, and then you have the CFTC on commodities. And even this debate of separating crypto between commodities and securities is a bit weird. And obviously saying that Ethereum, Solana, all the major, let's say, proof of stake protocol, right? Because that's my topic, are not common goods, but they are like Apple or Tesla. They are companies that have, a board and a responsible if the price goes down. It's just a shortcut. So at some point, and basically all the regulators that are doing well, they're taking crypto as a new asset. As a decentralized assets are different from bonds and different from equity, and obviously you have more clarity for companies to build in this jurisdiction. And just maybe one last thing, Kate, before you jump on, MiCA in France is doing well. AMF is doing well. I don't know if there's anyone from the AMF here. We have someone from the BPI on stage, but I'm proud to be in Paris right now, I have to say.
Very nice. Kate?
I'm also very proud to be in Paris. I'm probably more happy than proud. I've been working at US Congress about 10 years ago and have written some articles actually thinking that maybe Satoshi Nakamoto was the Fed or the CIA. Because if you think about it, it's actually ridiculously strange that US hasn't clamped down on crypto before, since dollar is the world's reserve currency. And Bitcoin was literally created to substitute dollars. If you think about it, and overall, America's aggressive behavior towards defending its economic interests, it's really strange. However, what's happening now shows that either something changed, or maybe it's a part of the long play with crypto. But back to your question about Hong Kong, I've been there 2 months ago, and you can clearly see that Hong Kong is becoming the Chinese backdoor into the crypto world. So going back to US, probably the fact that US started clamping down on crypto is also related to Chinese lack of desire to dig and figure out their relationship with this asset, because they banned it, 2013, and later the mining as well. So if suddenly China goes back to crypto and decides that they want to be the world leader in this technology and blockchain, well then US will suddenly be very concerned.
Geopolitics just makes tech even more complicated. Again, the other part of the US is, again, their legislative process is largely broken, so their ability to pass new regulation seems like almost zip, which makes it hard for them to actually be very strategic in the space. It's really opening up a huge opportunity for other jurisdictions. I want to bring us back, though, to this main topic of institutional, dig a little bit deeper there. We can keep bringing in some of the geographic stuff, though. Maybe, Nicholas, just in your experience, what are the different segments? How do we define institutional? What are the segments? And then we can sort of maybe think about, for those active in the space, where are the real opportunities in this? How do we unpack institutional?
Well, first of all, when you think about institutional, you think about last asset manager from the world. And as Kate said, there are almost no one right now in the market. Even if we see 1 billion, 10 billion coming in the crypto business, it's still, like you say, a drop. And you're perfectly right. The size of the financial market overall is so huge that the crypto market is still very, very far from being institutional. Even if you think about Grayscale and the money that came for their funds and so on, it's still very, very small and unmature. So you have, unfortunately,
huge growth opportunity.
But huge growth opportunity. But right now you have to
look on the positive side,
which will be at the end the next move, because there are some good signs that things are moving. But the large one you have to skip right now from the crypto space, and then after you've got the crypto funds, because there are hedge funds and people that are specialized companies. We have a company like us, because we work as an institutional when we work with Kiln or the other. You've got Coinbase Prime is an institutional solution. So every company has an institutional working also with family offices, some dedicated funds, but it's still very new right now compared to the large opportunity. If you...
Anyway, other people want to... Ivan, what's your sort of perspective on the landscape in institutional?
Yes, what's really interesting is that there is many approaches of this asset class. You can be a hedge fund, you can be a crypto VC and do token warrants, you can be a crypto asset manager, you can do liquid staking, and it will be interesting to see who will be the winners of this kind of evolution of the market. And it's very hard to know right now. Everybody thought that liquid strategies were amazing, but now most of the shops are closing, and on market neutral and arbitrage, it's not as good as before. And it will be super interesting to see who will be the clear winners. Crypto VCs are very well positioned, but some people say that A16Z is owning kind of 4% of the crypto space globally with all in investment, so it might be very risky. So happy to see also where the TradFi will come and how will they contribute and how will they take value.
Still interested in this question, but also if we can start thinking about what are these different players looking for when they think about whether or not to do crypto, especially some of the more traditional players that sit on all this money. But Kate.
Yeah, that's exactly. I wanted to address your second part even more, which futurism. So I think broadly, institutional players could be divided into two categories for the ease of understanding. The risk takers ones, which are crypto funds, VCs, hedge funds, who are more than happy to dabble with cryptos, figure out how to increase ROI and how to make outsized returns. And the other part would be the wealth preservers, which are tasked with a huge responsibility of especially preserving the wealth of the nations or big families. And of course, it would be very reckless for them to go into the industry with very low still regulation, where the money they invest can be suddenly hacked or suddenly stolen, and there isn't really very clear regulation or accountability of how to go after the perpetrators of this. So I think we are going to be staying in the drop of the ocean category for as long as we can't penetrate the wealth preservers market of institutional investors.
To what extent are people using recent events, the current pause, to put the foundations in place so that over time you will build the confidence? Do you feel, is the industry doing what it needs to do to get ready for a next uptake?
I mean, just coming back on the institutional question, just to say a few words, like...
It was a good question.
And obviously, coming back, I mean, obviously, like foundations will bring more institution in the space. So we work with pure players today, bottom of the stack, exchanges, wallets, custodian. And on top, obviously, you have crypto funds, hedge funds, market makers. But as you mentioned, they are usually crypto players, pure players, because the TradFi companies that have the most of AUM, the 100 trillions that we were talking about, they are still waiting for more clarity in terms of regulation, right? So there's no license in the world today on staking or DeFi. And it will come, but these players won't come in the crypto market before there's more clarity. That's first. Second is like, what's institutional for us? In staking, you need to have insurance. You need to have SLAs because you have still a risk. You're providing a yield, but you still have the risk of slashing. You need to have a reputation, right? We work with CoinHouse, and reputation is about everything, right? It's like overnight you get hacked, or you get slashed, or you get stolen, or you have a problem on the yield you're offering. Of course, you're damaging the ecosystem as a whole, but obviously your brand. So what was the previous question? Was like the foundation?
Is the industry, making the changes? Are they on the path to really create something that ultimately the wealth custodians could embrace?
Well, just to complement what Laszlo said, there is a need for, at least for the first part of what we defined as the crypto players right now, hedge funds and the current exchanges, broker, custodian, and so on, for more also transparency. And the regulation on one side is something, but it's for us, it's more like the ability to work in a better way, to work legally also with binding terms and stuff that were not necessarily the way of thinking before. You were working with funds without necessarily what you are used to get in the traditional financial industry. And that's why now, even in this ecosystem, there are some blockers. And the market is is still suffering from FTX and from all what happened last year, and what maybe will happen also because it's probably not finished. So we still need also to work in a better way and to clarify. We have really seen things changing between us and our counterparty, and the discussion that we have with them are now totally different. So they are much more eager to share about everything that they had, to sign contracts which are much more binding. And so we see that if they don't do it, we won't work. So at least for this ecosystem, this is mandatory. For the rest of the ecosystem, which is not crypto yet, probably the regulation and the fact that the first ecosystem works and grow will let them entering the crypto world.
So Ivan, maybe put you on the spot. You sit inside what's actually a pretty traditional organization, and yet you lead on crypto. How you want to just share a little bit about how it is to move a traditional organization?
The luck we have is that we have a mandate to finance innovation, so we can do grants, loans, equity financing, fund financing. Then there is the internal side, which is more complicated, but you have to practice what you preach. And the real thing is that you have to leverage on technology. This is the key. I mean, everybody could do flashbots. Everybody knew about front running, but it's hard and you have to be good at it. And if you're waiting for the very vanilla product, then your yield would be very poor. So I think banks should understand that this risk-reward couple is a very good way of analyzing this market. And there are still tremendous opportunities. And I think these opportunities will go and not vanish, but be less interesting. So I would encourage traditional finance to go now, like Société Générale did with the derivatives market in the 90s. And that was a huge success.
And I agree, use flashbots. It will get you better yields.
Very nice. Just we still have a little bit of time. What do you guys see from the institutional investor side, the sort of mix of decentralization versus centralization as we think about how to create a strong ecosystem? Clearly, a lot of the original excitement was around decentralization. The reality proves a lot more complicated. Anyone have a view on what institutions really going to be drawn in by pure DeFi?
I mean, I think what crypto brings first is trust and transparency, right? Then decentralization is a third, big word, but it's a spectrum. It's like, is DAO today, Lido, Aave, and other in DeFi decentralized? That's a big question. But at least you know where the money goes, the money flows, and that's really different from traditional finance. We've seen that with Silicon Valley Bank, right? Where everything was opaque and would crash the bank. So I think institutions in the space, they understand this concept of decentralization. For example, in staking, that's exactly what we're building. We're building aggregators so that they can use different staking providers. We run validators ourselves, but they will run validators for themselves or use different providers to spread the risk, to keep the network decentralized. So yeah, I think that's quite special to crypto. Everything is not decentralized today, but I'm still very bullish about the future.
But for you, you'd say the key selling proposition going forward would be more on amazing transparency that you can deliver, and less on some of the earlier stuff. Yeah, Kate.
I think the mistake we make when talking about centralization versus decentralization is looking narrowly into its application to financial sector and crypto specifically. While I think generally decentralization should be thought more in the domain of not just Web3, but basically the change of the whole way of how the world operates. And if we're talking about the wider adoption of cryptocurrencies, it's worth looking back to basics and seeing how cryptocurrencies were created in the first place. And they were created, Bitcoin, in conjunction with blockchain, the ledger. And I think instead of creating new tokens, new DAOs and NFTs, in fact, we should go back to the very beginning and the very point and reason of why these cryptocurrencies have been created in the first place. So until we have blockchain as a technology adopted in every sphere of our lives, which is record keeping, government details, data being kept on blockchain, our passport data, our internet searches, while it's not integrated with AI, until blockchain is in every single domain of our interaction, crypto is going to stay just a speculative asset and not an actual world-changing technology.
Okay, one thing that hasn't come up, I'm mindful of time, but we haven't talked too much about the basic technology operational effects. Is that because it's less important? That part's more in place? Where do we stand? Again, from the needs of institutional players in terms of the underlying technology foundations.
We have a big IT department. We have no crypto developers for now. The good news is that many guys in the IT department want to contribute and are like checking you at the coffee machine like, hey, want to talk about crypto? And I think that's the first great opportunity. And I agree with Kate. The other great opportunity is that when you go at the Political Science Institute at Sciences Po, students are talking about decentralization. And I think that at INSEAD too, and this is great. And I think the good balance between the two worlds might bring a next version, and I'm very excited.
Very good. I'm mindful of time. We're gonna start wrapping up. So I just invite all of you to offer sort of final thoughts. What maybe makes you optimistic about the future in institutional? Maybe a bit of a prediction. When will the market turn up, or whatever you want to do with it. We'll go this way. Nicholas, first up.
Okay, so yes, optimistic, because if you work in crypto, you have to be optimistic anyway. But yeah, really optimistic because we talk about institutional not going into crypto now, but in fact, when you grab a little bit and you go into the details, you see people moving. There are right now several European banks that have put in place teams. You mentioned it, and not only sovereign funds and people like what Ivan was talking about, BPI, but also real banks that wants to offer crypto to their customer. And I'm talking about retail banks, not about any neobanks which is from anywhere in Europe. I mean, so they are thinking, they are developing teams. They are not even considering now that Bitcoin is crime or is just money laundering. They reconsider that this is an asset. They probably understood what you said also about decentralization and so on, and they know that now they understand that if they don't move, probably they will be killed. Not now, but over 5, 10, 15 years, they might disappear. We talk about banks, but Visa or MasterCard as well, Stripe, Adyen, all those guys that are processing payments. In fact, when you go from a wallet to wallet, you don't go from a bank to bank, you don't have orchestration, you don't have any of the stuff. And it's fast. Just to make, we did something like a transfer of 1.6 million a few days ago from a wallet to a wallet in ETH. It cost us something like 0.21 euros. And it was very fast. How long does it take and how much does it cost to go from a European bank to something in Brazil or in Hong Kong? So now they understand. They know. They equip themselves. They start with custodian solution. People like Ledger, Fireblocks, Copper, BitGo, all those guys. And this is also what the guys are talking about us. You've got people also in many places in Europe developing this. So it's going to happen. This year, no, but probably 2024, 2025,
We want a date.
you will see.
Yeah. Which quarter? 24. No, just. Kate, you're up.
Back when I was lobbying the lifting of Cuban embargo legislation in Congress, I was usually told to get lost by most congressmen on the Hill because back then it was quite an outrageous proposal, and Cuba was the big enemy of America. If you think about it, crypto overall is such similarly outrageous concept to the whole financial system as lifting Cuban embargo was 10 years ago. However, when you are raising the subject of investing into crypto or adopting blockchain, no financial institution today will dismiss you fully. They will potentially say that they're not ready yet. They might say that they're looking into it, or they might say it's not maybe in their risk profile just yet, but they will consider it. And for the technology that's been around less than 2 decades, it's actually quite impressive. Today, we can have a crypto conference and crypto party and after party in any single point in the world if we wanted to go to a crypto gathering every single day. It's not even the same for technologies that are equally groundbreaking, like AI or quantum or different IoT chemical components. So for as long as crypto's been around, the progress we've made is outstanding.
Yeah. It's like the first downturn where people aren't talking about crypto actually going away, right? It's just a regular downturn. Laszlo, closing thoughts.
Yeah, I mean, if the question is like, am I bullish in crypto, in the crypto market these days? Of course, right? It's like I have lived 3 bear markets. This one is actually the best bear market I've lived, right? It's like the prices are not going falling completely apart. And the amount of companies building in the space are just insane. It's like there's so many innovation happening right now, and you were talking about AI. Obviously, AI is a groundbreaking technology, but I really think the most innovative, the fastest growing, the number of intelligent teams working together to advance this unique technology compared to any other technology. You know, crypto is amazing in that way, right? And there's a lot of innovation happening. Then, if you look at institutions, you were mentioning Société Générale, with Fidelity, Société Générale, Goldman Sachs. I can tell you that these guys are preparing for the coming years. Of course, they're not flowing a lot of assets into crypto now because of regulation, we mentioned it, but still, it's coming. And last but not least, the bull market, I think, is... no, I'm not going to give you like...
Okay, Ivan.
Next year.
Please.
Which quarter?
Ivan.
Very quickly, very bullish on ZK proofs because it's very compatible with European Commission vision about AI. Okay, we have questions, it's working, but does that scale, and is there a real business model? But very bullish on this. And of course, as you mentioned, when you have the best talents and VC money, you are in the best position.
All right, thank you. Nicholas and Kate, Laszlo, Ivan, thank you very much for your insights. Big round of applause for our panelists, please.
Thanks to you.
Thank you.
And enjoy the rest of the time.